So as I was just noting, NASDAQ is positive for the year at a time when I just talked to Carl Guardino, the head of the Silicon Valley Leadership Group, yesterday on CNBC. He said that based on his surveys, job losses in Silicon Valley are looking like they'll be on par at least with the worst of the dot-com bust and the financial crisis. So what is the likelihood, you think, that some of these businesses, even in tech, just haven't yet felt the full weight of reality because of stimulus, because of other things, but it's coming? And are you pricing that in?
Well, I think that's a darn good question. We haven't seen the real economic impact of what happens to consumer spending. And most tech is cycled against consumer spending. We haven't seen what the real impact is when those unemployment rates are as high as they now are, and the impact that has on spending later this year. Even the mighty Amazon is going to be negatively impacted if we're staying close to 20% unemployment, for 6 months. So, yeah, we haven't seen the impact of that yet. We've seen the impact of what shelter-in-place restrictions do to these businesses, and some of them are structural winners from it, but a lot of them are negatively impacted. All the ad names are impacted. You had Glenn Fogel on before. His industry, online travel, is clearly materially impacted. You also have the ride-sharing companies. They're impacted just as much as the travel companies, or almost as much. So we have seen negative impacts, and we could still see worse in the back half of this year.
Yeah, along those lines, you raised a lot of price targets lately. I want to particularly focus on Uber. Uber's trading now at around 32, a little less than 32 bucks this morning, about where it was 9 months ago. I believe you got a $52 target on it. That's about 60% up from here. But it seems to me that if people aren't full in going back to work, they're not taking Ubers to work, then they're not taking Ubers to lunch from work, then they're not taking Ubers back to work from lunch, et cetera, et cetera. Why the raised price target even above where you've been in the past, and what's built into that assumption?
Yeah, thanks, John. I want to tee off on this. Look, Uber's our number one pick. It's our number one rebound pick. It's been our number one pick going into the year. The stock was doing great. And then we had COVID crisis. The stock plummeted. We thought the stock oversold. We are now starting to see green shoots out of this company. They and Lyft have said that the last 3 weeks, they've seen week-on-week growth. And in the states that have opened up, Georgia and Texas, they've seen the rides part of their business jump up 40 to 50% off the lows. Look, as soon as we leave our homes and commute, whether it's for work, for social occasions, we're going to be using ride sharing. It may take a while for people to be comfortable to do that, but I don't think it's going to take that long at all. I think that's what the Georgia and Texas data tells you. In the meantime, you've got this Eats business at Uber. We thought that may be a structural winner out of this crisis. Guess what it is? In the March quarter, Uber Eats grew about 50% year over year. In the month of April and going into May, that's gone up to 90% year over year. This company's also taken a lot of costs out of its business. The overhangs prior to COVID were, can you make the economics work out of Eats, and can you drive this business to profitability? They're going to be a little bit delayed. I don't think they'll get there in Q4 of this year, but Q1, Q2 of next year, this will be a profitable enterprise growing, well in excess of 30% overall. I think this is the time to buy it.
I think that's interesting, Mark. Pre-COVID, remember all the complaints about the business model is too complicated. Eats was weight around their ankles. They got to get out of major markets. Now there's a lot of investors who were awfully glad that Eats business is there.
It turned out to be a little bit of a hedge. Now, it's a small portion of the business. It's only 15%. But you're right. There were two major overhangs prior to COVID. One was the profit outlook for Eats. And one other good piece of news we got was that the peak EBITDA loss, the peak loss quarter for Eats turned out to be the December quarter, not the March quarter. And our guess is you're going to see declining losses until you reach that break even for the company as a whole. But you're definitely going to see that in the Eats business. The unfortunate reality is they've got tons of drivers now. The unfortunate reality is a lot of restaurants are eagerly trying to get onto online food delivery. They're opening up. They're working with Uber Eats in a way they weren't prior to the crisis. Those are all unfortunate consequences, but they are consequences of this crisis. That makes the Uber business model better.
Mark, finally, I want to ask you about the JEDI contract. Things heating up between, at least the rhetoric, between Amazon and Microsoft. Amazon hitting back this morning in a blog post laying out their argument for why they think the facts are for this being reconsidered, saying we don't think the JEDI award was adjudicated fairly, and we think political interference blatantly impacted the award decision Is this just a field for Amazon and Microsoft to play out their broader kind of marketing battle over who's really legit in the cloud? Or are there real dollars and profits potentially to be lost or gained here?
The answer to those questions is both, John, and I think you know that. Obviously, this is really important. Go back in history. The most important contract AWS ever won, I'd argue, was the CIA contract back in 2013. That put kind of the stamp of approval. If the CIA, if the AWS is good enough for the CIA, it's good enough for everybody. And at that time, that was an emerging technology. You go forward to today, this is not only a sizable contract, we're talking $10 billion over many years, but it's also the Department of Defense. So it's really key for both of these companies. It's very hard to know externally for any of us to know whether it was really adjudicated correctly or not. Was there political interference? That's clear that there was, but whether it actually influenced, there was an attempt at it, whether it actually influenced the end decision, that's almost impossible to know externally.